Welcome back, investors and traders. Today we are going to look at the quarterly results of IDFC First Bank. They have announced the second quarter results, and stock has nosedived. But let us look deeply into the what led to this fall in the net profit of IDFC First Bank, and what is the reason for the stock price to crash today in the markets, and how the market views this bank from the long term sustainability perspective. How is the how the loan book of IDFC First Bank is shaping up. So all these points, let us look at the detailed presentation on IDFC First Bank. So in this presentation, first we are going to look at the deposits of the bank, how the deposit growth has taken place. Then we are going to come at the cost of funds, then what led to the fall in the net profit, how the provisioning has happened, how the microfinance book has been impacted by whatever reasons, how the tolls, the government has announced that inbound light vehicles will be exempted with the toll. So how that has impacted IDFC First Bank. So first let us look at deposits, then let us look at the loan book, and then identify the reasons. So in terms of deposits, the September quarter, it has grown at 2 lakh 18,000 crores, and there is a growth of 6.6% on a quarterly basis. So this looks pretty good. CASA deposits has grown by 11.9%, and it is at 1 lakh 9,000 crores. CASA ratio is 48.9, so this has increased compared to the last quarter. And credit deposit ratio is 77.8. As far as the deposits are concerned, let us look at the split between wholesale deposits and retail deposits. So here you have 80% deposits are coming from retail segment, and around 20% are from the wholesale deposits. Now coming to the cost of funds, the bank's cost of funds is currently at around 6.47%. Whereas the repo rate has gone up from 6.25 to 6.5%. So as of now, the cost of the bank, cost of funds is 6.47%. And what are the details of deposits and borrowing details? So here we have the particulars of legacy long-term and infrastructure bonds. So that is, YOY it is minus 41%. Refinance and other borrowing is up. So total borrowings 31,522 crores as of September. Whereas in CASA, then plus CASA deposits 1 lakh 9,000 and term deposit 1 lakh 8. The total 2 lakh 18,000 is customer deposits. So 31,522 is borrowings. Customer deposits are 2 lakh 18,000 crores, and then you have CDs, money market borrowings, etc. At add that, so 2 lakh 69,951 crores. So this is your borrowing details. Okay, 2 lakh 61,951, which is up 20%. And the overall CASA ratio is pretty stable, and average CASA ratio is 46.3. So that looks pretty good numbers. Coming to the loan book, we have to see what is the loan book as of 30th of September. So if you look at the loan book on 30th of September, we have total corporate loans 16%. This is this blue pie. Infrastructure loans have been reduced substantially, which is just 1%. Retail mortgage backed loans 29%. So these are this is the retail mortgage loans, backed loans. Vehicle loans 11%, rural finance 10%, and here you have MSME financing 8%, other retail consumer loans 24.9%. So this is the mix of the total loan book of the bank. As far as the loan book is concerned, we'll have to see what was the stress and which areas of the loan book where the IDFC Bank observed some sort of a stress in terms of collections, and we'll have to see what are the reasons for those stress in those areas, and how the bank is taking steps in the future to ensure that these provisions do not get repeated in the next quarters. तो एनालिसिस ऑफ लोन्स एंड एडवांसेस बाय नेचर ऑफ बिजनेस. तो यहाँ पे देख सकते हो कि रिटेल फाइनेंस में होम लोन्स इज अप around 19.9% here. Loan against property is up 20%. That is okay. That is you have collaterals against that, so there is not an issue as well. Vehicle loans 32.6%. तो vehicle में इन्होंने काफी अच्छा किया है on a YOY basis. Then consumer loans is 21.8%. There also you have you have got good growth here. Education loans is 59.7. So this is also, it's a small base, but the growth rate is very high. Credit card loans 47.9%. The unsecured loans, I don't think that has also gone up, but the bank has to ensure that these are unsecured loans, so they will have to ensure that it doesn't go out of control. Gold loans are 185% up, so but the base is very low. So total rural finance 13.6% is the YOY growth, and MSME and corporate 20.7%. So as far as collection efficiency is concerned, yeah, it is maintained at stable at 99.5% excluding microfinance. So here you have 99.5% they are maintaining throughout, which is pretty stable. Collection efficiency is pretty good for the bank. Now coming to the concerns, what has been the reasons for the sharp fall in the net profit of the bank? So deterioration in collection percent of microfinance business. So yeah, microfinance business was the main stress area for the bank in the last quarter, and there if you see here 98.6%. So this there is a deterioration in a collection efficiency percent. So here if you see collection, they have mentioned collection efficiency percent and they have given some formula, but definitely they are seeing stress in the microfinance business. In this slide, if they have the bank has mentioned that the SMA1, SMA2 portfolio as a percent of retail, rural, and MSME loan book. So here you have a pre-NPA, the what 31 to 60 DPD they have categories at SMA1, 61 to 90 DPD they have categories as SMA2, and greater than 90 DPD is NPA. So this is the norm they have used for classifying any accounts as NPA. So excluding microfinance business, this is pretty stable. That is what the bank says. But 0.87, so somewhat this if you see here, slight reduction here. But this is excluding microfinance, and if you see here, the it is pretty stable here. This slide gives a the overall the product wise SMA analysis. So if you see mortgages, it is pretty stable here. Vehicles also is quite stable. As of September 24, it is gone down 1.07 here SMA. Then you have MSME is also okay. Consumer durables is fine. Credit cards also is okay, stable. But microfinance business, if you see here, they have increased to 2.54%. So this is a bit of a concern. Microfinance business is bit of a concern as far as the bank is concerned, and they got impacted in the last quarter because of the flooding in Tamil Nadu. Plus there was a heat wave in the previous quarters, and the election time, there was a election, election. So because of all these things, there the microfinance borrowers, they faced a lot of issues in their business, and which impacted their repayment capability. So that is what has happened in this quarter. So microfinance business, this has been impacted to a larger extent. Now microfinance business is basically small ticket size loans. So basically what they are doing is they are giving the loans of ticket size 30,000 rupees to 1 lakh, okay, to these small farmers, for the small ticket loans to women borrowers in rural areas for livelihood generation. Then 4 to 6 members, they form a group and they provide collateral free loans, okay, to with a mutual guarantee among the members. Then the objective is to drive financial inclusion, providing loans to women entrepreneurs. And 98% of the portfolio eligible for PSL under multiple categories of agri, small, marginal farmers, weaker sections. So basically, these microfinance loans are given to to these women entrepreneurs, etc. And that is where the bank has seen stress. Now, because of this, the bank has been trying to reduce its microfinance disbursements, because they have identified in December 2023 that the microfinance sector is facing a lot of problems in repayments, and they are trying to reduce their microfinance portfolio. So the disbursements are definitely going down here. So they have taken a proactive step here where disbursements are going down. So in last quarter of FY25 second quarter, the disbursement have reduced to 2079 crores. So these are the proactive steps where they are trying to reduce the disbursements. So they declined around 51% in last 1 year. Then microfinance outstanding book, if you see, that is also going down. They declined 8.2% in 9 months. So microfinance outstanding book is around 12,520 crores, and that is also on a declining trend. So as far as the microfinance business is concerned, they have increased the cover from 0%, which was there in December 23, to around 50% in September. So if you see here, the coverage was 0% here, which they have increased to 50% as of September 24, and they plan to raise this to 75% by March 25. Here, the credit card portfolio, if you see the delinquencies, they are compared to the industry, the IDFC's first banks, the delinquencies are somewhat okay. Here you have IDFC First Bank and 30 DPD trend. If you see here, so for IDFC First Bank, 3.4 to 3.3, 3.6, and now it has gone down in September to 3.4. Whereas the industry, if you see, industries delinquencies are going up here, so it is at 4.6 here. So IDFC First Banks, compared to the industry, the delinquencies are lower here for 30 DPD, and even for 90 DPD also the IDFC's delinquencies at around 1.4%, whereas the industry is at 1.9%. So that is this is a positive for the bank. Now coming to the asset quality, here we have to look at a gross NPA and a net NPA. Okay, so here if you see the for the home loans, if the gross NPAs is around 0.66%, which is and net is 0.34%. So for home loans, pretty stable here. There is no issues here. Loan against property also, it is at 1.48% gross and 0.75 net. That is okay. Vehicles 1.73 is gross, 0.75 is your net NPS. Consumer loans is around 2%. Net NPS is 0.61. So this is also pretty somewhat okay. Rural finance is 1.76% gross NPS. Digital gold loans is 2%. 1.95% is credit card. So this is a little bit higher here. Unsecured lending here. SME finance it is 1.22, और यहाँ पे आप देखो तो infrastructure finance is 24%. Okay. And 1.36 is your net NPS. So basically what they have done is the overall on the asset quality front, they have tried to maintain the the NPA percent as lower. Now let us come to the root cause why the IDFC First Bank's net profit crashed, and why the stock price nosedived after the results were announced. So majorly there are two factors which contributed to this fall. One is the microfinance business, and second is the legacy infrastructure toll road account. Okay, so they have made a provisions here. So that is the reason why IDFC First Bank net profit went down, because the provisions for second quarter at 1732 crores. Okay, because of prudent provisioning buffer of 568 crores created for microfinance business and one legacy infrastructure toll account. Okay, so these are the two reasons why 1732 crore was the provisions. Now for microfinance business, if you see here, the bank made a conservative contingency provision of 315 crores as against microfinance business equivalent of 99% of SMA 1 plus 2 portfolio and 2.5% of the entire portfolio. So here they made a provision of 315 crores for microfinance business, and Maharashtra government withdrew the toll charges at Mumbai entry points, which adversely affected the infrastructure customer. And bank has taken 100% provision, and they have made additional provision of 253 crores on proactive basis. So these are the two major reasons why the net profit was much lower as for the second quarter for IDFC First Bank. Excluding the provision in microfinance portfolio and without additional provision buffer created on the legacy toll account, a quarterly annualized credit cost for the loan book was 1.8%. So यहाँ पे ऐसे हुआ है कि because of these two reasons, IDFC's stock has taken a beating here in today's session. Microfinance business, it's a business where which are very small borrowers, entrepreneurs, women entrepreneurs, and very poor sections of the society where who don't have much repayment capability if there is any natural calamity like floods, etc. So in that case, their repayment capability is drastically reduced, and your collection efficiency takes a nosedive when such flooding, etc., when the heat wave flooding and their business is impacted, so their repayment capability gets reduced drastically. So microfinance business is a one major area of concern for IDFC First Bank. They will have to reduce this exposure or try to see to it that they make sufficient provisions, so that in henceforth in the next quarters there is no such negative surprises. Second thing is which is out of their control, is that Maharashtra government announced at Mumbai entry points the withdrawal of the tolls for the light vehicles. So there also the bank has taken a beating here. So overall, if you see here, excluding these provisions, the bank has shown a good performance. But because of these two areas, the net profit has drastically gone down because of these provisions. So overall, this is what the The analysis of First Bank's second quarter results. Overall, the bank is from the longer term perspective, from the sustainability perspective, they have got very good risk management practices. Collection efficiency is good, and they are trying to reduce their corporate infrastructure loan book and try to increase the retail book. They're all positive factors for the bank. And the retail deposits are growing. Okay, so from those aspects, the bank has clearly made a name for itself in the banking space. And the one major positive thing which might trigger some positive issues in terms of higher NIMs. Okay, how do the banks net interest margin will go up in the future is when, in case if the inflation for the October month is comes lower, and RBI in the December monetary policy, if they decide to reduce the repo rates, then these banks will get a much needed positive things, where their cost of funds also will go down, and their net interest margins will start looking up. But definitely there is a short term pain in such type of banks, where IDFC First Bank, IndusInd Bank, they all gave Kotak Mahindra Bank, they all asset quality was deteriorating. So the last quarter was a washout because of flooding, etc., and microfinance book also was impacted. So overall, on a longer term perspective, these banks are pretty stable banks, and with the rate cuts in the future, these banks will definitely show much better NIMs. So that was the results of IDFC First Bank. I hope you like the video. If you like the video, kindly click on the like button. Thank you.